With this, let's also connect with Rahul Sharma, Director Head of Technical and Derivative Research at JM Financials. Hi Rahul, good afternoon. Good to be speaking with you. Rahul, we are indeed looking at the long weekend, but what should investors or traders rather do at this point in time? Because in the last 3 days, Indian markets were clearly one way upward on the upward trajectory. There's been no sort of a nervousness trickling in, but what to do with the long positions right now, and which pockets are you finding good at this point?
Yeah, very good afternoon. So I think this is a good opportunity to take some profits. We've seen, a rally of around 1500, 1600 points on the Nifty, primarily done on the basis of gap ups, and gap ups are something which don't excite me as a technical analyst. So I think it's best to book profits. It being a long weekend, obviously, plus we also have the weekly expiry today, and plus 23,500, 23,600 is the resistance area as well for the Nifty. So my sense is, at this point in time, the risk reward is not favorable for fresh longs. So, as far as Nifty is concerned, it is better to book out on long positions and sit out. On the flip side, it is banks and financials which continue to be robust. There are, some big results lined up over the weekend. We have Bank Nifty, which is, trading very strongly along with Fin Nifty, which is leading the market. I think here the momentum may continue and we may see more upside happening over the next week. But having said that, I think it's best to sort of trail your stop losses. If you made good money in this week or over the last 5-6 trading sessions, it is advisable to take some money off the table and rather look at stocks which haven't moved. Now, what looks good from our perspective, on the financials, we like Cholamandalam Finance. Looks very good for a target of 1700 on the upside, can be bought at these levels with a stop loss of 1530. On the PSU banking pack, Bank of Baroda is another stock which looks good for a target of around 8 to 10% upside from current levels, can be bought with a stop loss at 233. And lastly, Adani Ports is one stock which has taken out its 200-day EMA today's session, and it's preparing itself for a big reversal on the card. So our view is over the short term, this may test around 1300, 1325. But over the medium term, we can even expect targets of 1400 and above. So both from a positional as well as short-term perspective, you can look at Adani Ports. There are three stocks which we feel are looking good in spite of, there could be some bit of profit booking in the Nifty, which is, something which can be expected after the major run-up that we've seen recently.
Okay, Rahul, thanks for that point. This is Nehi also joining in the conversation. Rahul, while the market breadth today is looking rather stable, what are you making of the entire broader end of the market, the mid-cap and small-cap space when we come back on Monday after the long weekend? Because this space too, like Nifty, right, has seen quite the bit of a leg up, especially the small-cap side of the market. Do you believe that this is sustainable going into next week, or are you spotting some profit booking there as well?
Yeah, so mid cap, small caps, we feel that they've also run into resistance levels. The index, I'm talking about the mid cap 100 and the small cap 100 index. On the flip side, we are actually not advising clients to go aggressive on mid caps and small caps because this is primarily a market where large caps are expected to dominate the market. And the advice is to go overweight on large caps and remain underweight on mid caps and small caps. As a trader, probably we could trade a bit here and there, but serious commitments are something we are not advising clients to get into, especially because it's the earnings season. Globally, markets are not really out of the woods, so it's better to stick to these tried and tested names, especially the ones where risk rewards are still favorable. The names which haven't really moved as much as the Nifty has moved over the last few days, which are expected to play catch up. So that is a strategy that we are recommending to the clients. A very select approach where large caps are ones to go for.
Stick with the large caps, but Rahul, especially today, what we are seeing is that a lot of these small pockets are trying to make a comeback. But case in point being the chemical basket, that is doing well. The metals on the other side, they are shining bright. And what I see, select financial names, apart from those 5 to 6 large cap banking counters, are also holding up well. Rahul, any small pockets where you are looking at, or any theme that is looking interesting to you?
Yeah, you could look at, so one ETF that we are recommending to clients is the Junior Bees ETF. It has got the right mix of stocks, right from a 50,000 crore market cap to around 2.5 lakh crore market cap. So that is one area that can be considered. Secondly, the top three sectors are banking, financials, and followed by domestic consumption. So domestic consumption is one which may not get affected as much as with what is happening globally. So there are three themes where we are focusing our trading calls as well as investment calls, at least for the time being. Once Nifty sees a correction, I think then the equation will become all the more attractive. And this is a classic buy on dip market. We've seen a good rally. It's the weekend. I think it's good to take profits and go into the extended weekend and look on Monday with a fresh mindset.
Okay, thanks so much for joining us, Rahul, and sharing with us your view on what we are expected to do with the markets in terms of when we open on Monday in terms of the benchmark as well as the broader end of the market. Once again, great speaking with you. Thanks so much for joining us.
If you like this video, then like, share and subscribe to ET Now.